There was a moment in my trading life that didn't feel dramatic at all. No blown account, no market crash, no emotional breakdown staring at red candles at 3 in the morning. It was quiet, almost boring. I was sitting in front of my screen after closing a profitable trade, a clean setup, good risk to reward, everything executed exactly the way it was supposed to be. And yet, instead of feeling satisfied, I felt tired. Not physically tired, something deeper than that. I remember leaning back in my chair and thinking, if this is winning, why does it still feel like I'm barely surviving? That was the first time I questioned something most traders never dare to question. Not my strategy, not my psychology, but the role I was playing in the market. For years, I called myself a trader. Like many of you, I believed trading was the fastest path to freedom. Freedom from bosses, freedom from schedules, freedom from financial pressure. And to be fair, trading gave me things. It sharpened my discipline. It forced me to understand risk. It humbled me in ways no other profession ever could. But it also kept me in a permanent state of alert. Every position mattered. Every drawdown felt personal. There was a moment in my trading life that didn't feel dramatic at all. No blown account, no market crash, no emotional breakdown staring at red candles at 3 in the morning. It was quiet, almost boring. I was sitting in front of my screen after closing a profitable trade, a clean setup, good risk to reward, everything executed exactly the way it was supposed to be. And yet, instead of feeling satisfied, I felt tired. Not physically tired, something deeper than that. I remember leaning back in my chair and thinking, if this is winning, why does it still feel like I'm barely surviving? That was the first time I questioned something most traders never dare to question. Not my strategy, not my psychology, but the role I was playing in the market. For years, I called myself a trader. Like many of you, I believed trading was the fastest path to freedom. Freedom from bosses, freedom from schedules, freedom from financial pressure. And to be fair, trading gave me things. It sharpened my discipline. It forced me to understand risk. It humbled me in ways no other profession ever could. But it also kept me in a permanent state of alert. Every position mattered. Every drawdown felt personal. Every mistake demanded immediate correction. I wasn't building anything. I was defending myself. Back then, my definition of success was simple. Don't blow up. Don't give it all back. Stay in the game one more month. That mindset kept me alive in the early years. It taught me survival. But survival has a ceiling. The turning point didn't come from a massive loss. It came from consistency. Month after month, I was profitable. Not spectacular, not life-changing, just steady. And that's when something uncomfortable surfaced. I realized that even on my best days, my income was capped by my attention, by my screen time, by my emotional energy. If I didn't trade, nothing moved. If I stepped away, everything paused. I wasn't building wealth, I was extracting income from stress. And that realization was harder to accept than any losing streak I had ever been through. Because no one talks about this phase. Most trading content ends at become profitable. Very few talk about what happens after. After you can trade, after you know your edge, after you stop making rookie mistakes, that's when the real question shows up quietly. Is this how I want to survive for the next 20 years? I started looking at people who had been in the markets longer than me, not the loud ones on social media, the quiet ones, and I noticed something strange. The longer they stayed in the game, the less they traded, the less they reacted, the more patient they became. They weren't chasing setups anymore. They were positioning themselves. That's when it hit me. At some point, the market stops being a battlefield and starts becoming a landscape. Traders fight inside it. Investors shape their life around it. And the skills that keep you alive as a trader are not the skills that let you compound as an investor. That realization didn't come with excitement. It came with resistance.
because switching from trader to investor doesn't feel like leveling up. It feels like letting go of control. And for someone who survived by controlling risk every single day, that is terrifying.
The biggest mistake I made back then wasn't overtrading. It wasn't revenge trading. It wasn't even risk mismanagement. Those were beginner mistakes. I had already survived them. The real mistake was more subtle. I believed that being good at surviving short-term risk meant I was good at building long-term wealth. I wasn't. Trading trained me to think in days, sometimes hours, sometimes minutes. Even when I said I was thinking long-term, my nervous system didn't agree. It was wired to react, to defend, to cut fast, to stay sharp. That mindset saves you when you're fragile, when one mistake can wipe you out. But it also traps you, because once you're no longer fighting for survival, that same reflex becomes a limitation. I remember missing several long-term moves, not because I didn't see them, but because I couldn't sit with them. I would take partial profits too early. I would hedge positions that didn't need protection. I would exit winners just to feel safe. And every time I told myself I was being disciplined. The truth was harder to admit. I was still trading like someone who feared extinction, even though I was no longer at risk of it. That fear kept my account stable, but it kept my net worth flat. What hurt the most wasn't the missed profits. It was the realization that I was working harder as my edge improved, not less. I was more skilled, more experienced, and yet my life was still organized around screens, alerts, and market open times. That's when the pain changed shape. It wasn't about losing money anymore. It was about losing time and optionality. I couldn't disappear for 3 months without everything stopping. I couldn't think in years without feeling uncomfortable. I couldn't let capital work without me supervising it constantly. I had mastered short-term risk, but I hadn't learned how to step back. The revelation didn't come from a book. It didn't come from a mentor. It came from watching what didn't move. I noticed that the wealthiest people I knew weren't the most active. They weren't reacting to every macro headline. They weren't glued to screens. Their capital was positioned, not managed minute by minute. They accepted volatility in exchange for asymmetry. They allowed drawdowns that would terrify most traders because their survival didn't depend on precision. That was the moment I understood something uncomfortable. Trading is about not dying. Investing is about allowing time to do the heavy lifting. As a trader, my job was to avoid ruin. As an investor, my job was to avoid interference. Those are very different skills. One requires constant attention. The other requires restraint. And restraint is far harder for someone trained to react. The shift wasn't about abandoning trading. It was about changing my relationship with capital. Instead of asking, how do I protect this trade? I started asking, what kind of life do I want this capital to support over the next decade? That question changed everything. I stopped seeing volatility as an enemy. I stopped needing to be right quickly. I stopped measuring success in weekly P&L. For the first time, the market stopped feeling like a threat and started feeling like an environment. Unpredictable, sometimes violent, but navigable if you stopped trying to control every wave.
What most traders don't realize is that the difference between trading and investing is not time horizon. That's the surface explanation. The deeper difference is what problem you're trying to solve. Trading exists to solve one problem, survival under uncertainty. Investing exists to solve a different one, growth under uncertainty. When you're a trader, your capital is fragile. A string of bad decisions can erase years of effort, so your entire system is built around defense, position sizing, stop losses, constant monitoring, fast exits, all necessary, all life-saving. But that same defensive architecture becomes a bottleneck once your capital crosses a certain threshold. Because capital doesn't compound when it's constantly being protected from short-term noise. It compounds when it's allowed to stay exposed to long-term asymmetry. Here's where most retail traders get confused. They think investors are just traders with longer holding periods. They're not. Investors are people who have accepted that precision is the enemy of scale. Let me give you a real example. During one of the major market sell-offs, I was trading actively. Clean entries, tight risk. I did well on the volatility. At the same time, someone I knew, far less technical, far less skilled by trading standards, was simply holding a basket of quality assets. No stops, no constant adjustments, just position sizing and patience. While I was exhausted from decision-making, he was bored. A year later, his net worth had quietly outpaced mine. Not because he was smarter, but because his capital was working while mine was waiting for instructions. That's when I understood how smart money actually thinks. Smart money separates capital into roles. Some capital is for defense, some is for offense, and some is for time. Retail traders usually put everything into offense. They want every dollar to perform, every position to justify its existence daily. Smart money doesn't do that. They allow part of their capital to be inactive in the short term so it can be dominant in the long term. This is why hedge funds and family offices don't obsess over daily P&L the way traders do. Their survival doesn't depend on short-term accuracy. They care about exposure to irreversible trends. Traders try to predict moves. Investors try to own inevitabilities. That's a fundamental shift. When you trade, volatility is danger. When you invest, volatility is simply the price of admission. Another uncomfortable truth I had to accept was this: trading rewards effort, investing rewards restraint. As a trader, doing more sometimes helps. As an investor, doing more often hurts. I had to unlearn the reflex to intervene. Every dip didn't require action. Every rally didn't require monetization. Every headline didn't deserve attention. That felt irresponsible at first, but over time I saw the pattern. The biggest returns didn't come from perfect entries. They came from staying positioned while everyone else was busy reacting. This is why many professional traders eventually migrate toward investing, not because they can't trade, but because they finally understand leverage at a different level. Time is leverage. Emotional distance is leverage. The ability to do nothing is leverage. And here's the insight most retail traders miss. You don't become an investor by holding longer. You become an investor by changing what you optimize for. Traders optimize for accuracy. Investors optimize for durability. Traders ask, what's the setup? Investors ask, what survives? That question alone filters out most noise. When I made that shift, my relationship with the market changed. I stopped needing to be right quickly. I stopped feeling threatened by drawdowns that didn't change the long-term thesis. I stopped measuring success by activity. My capital stopped feeling like a weapon I had to wield and started feeling like a system I needed to protect from myself. That's the real transition, not from charts to fundamentals, not from short-term to long-term, but from control to trust. And trust, ironically, is what most traders lack because the market taught them never to trust anything.
The shift from trader to investor didn't happen overnight for me. It wasn't a switch I flipped. It was a series of small, uncomfortable decisions where I chose restraint over control. The first thing I had to change was how I separated my capital. When everything was treated like trading capital, everything demanded attention. So I stopped asking my money to do one job. Some capital stayed in trading. That part of me still enjoys the craft, the precision, the challenge. But another part of my capital was given a different mandate. Its only job was to survive volatility without my supervision. That meant no constant tinkering, no micromanaging, no emotional overrides, just clear sizing, clear intent, and time. The second change was psychological, not technical. I had to accept that drawdowns felt worse as an investor than as a trader because they lasted longer. As a trader, pain is sharp and short. As an investor,
It's slow and quiet. That's where most traders fail the transition. They mistake discomfort for danger. Every pullback feels like a mistake. Every period of underperformance feels like incompetence. So they interfere. They hedge too early, they reduce exposure at the wrong time, they turn long-term positions back into short-term trades. I had to learn to ask a different question before acting, not, is this uncomfortable, but has the underlying reason for this position actually changed? Most of the time, it hadn't. The third change was how I measured progress. Weekly P&L stopped being the scoreboard. So did monthly returns. I started measuring decisions instead of outcomes. Did I follow the original intent? Did I respect position sizing? Did I avoid reacting to noise? Those questions mattered more than whether a position was green or red, because consistency at that level is what compounds, not speed, not excitement, not constant action. And maybe the hardest application of all was learning to be okay with boredom. Investing, done properly, is boring. It doesn't stimulate the nervous system the way trading does. That boredom is not a flaw. It's a signal that your capital is no longer dependent on your adrenaline. If there's one lesson I want you to take from this, it's this. Trading teaches you how not to die. Investing teaches you how to live longer than the market cycles. Most retail traders never make this transition because survival becomes an identity. They confuse being sharp with being successful. They confuse activity with progress. There's nothing wrong with trading. It's a powerful skill. But if you never evolve beyond it, your strategy for survival eventually becomes a ceiling. At some point, the question changes. It's no longer, can I win this trade? It becomes, what kind of life do I want this capital to support over the next 10 or 20 years? That's when you stop fighting the market and start positioning yourself within it. If this resonated with you, I want you to pause for a moment and think honestly, are you still trading to survive, or are you ready to let your capital grow without you watching every tick? Leave a comment and tell me where you are in that journey. And if you want more conversations like this, about the parts of trading no one really talks about, make sure you subscribe to Staro Trading. This channel isn't about hype, it's about longevity. Master yourself, master the markets.